black leggings are black leggings are black leggings. And so it's really about the brand. This week in e-commerce, episode 135. I am Mal Chia, and back is Alex Ross, fresh, quote unquote, from iMedia. How was it?
I'm feeling fresher than I was the last morning of the conference, but it was awesome. It was my fourth year, and I think my favorite one to date. I think few reasons behind that. They changed the agenda a little bit, so it was nice to just mix things up. Obviously, there were some new faces in the room, which was great, but I felt like as a collective, there's so much change, AI, agentic commerce. It felt like there was more of a problem to solve together. And those conversations, people were really trying to take learnings back for the business.
Were there, so besides those key topics, like I guess what were the major challenges which a lot of the retailers were facing?
I think it's knowing the problem and then struggling to move quickly and get approval and bring teams onto that vision. So that kind of management piece, as well as having these people talking about agentic, but not knowing truly what that means and having less clarity, I think, for the logistics of it all.
Absolutely. I think that's a common theme which came through at ETAL Asia as well. With one of the panels which I was moderating, we asked that question around what does agentic actually mean? And from 4 panelists, we got 4 completely different answers depending on where you sit in the value chain.
Yeah, it feels like a trick question.
It does. Okay, we're going to dive straight into it because we have a lot to cover off before we head off to the Gold Coast. And there's a lot of interesting cultural trends which have been taking place. And the first one I'm going to talk about is our first quickie, which is the rise of value-seeking customers. And this isn't just about the typical discounts, but we've seen 2 things, interesting things happen this week, which is one which you shared this morning, which is 2 broke chicks had a reel offering brands offering free shit, which also links back to a page where they, a group where they list all sorts of discounts which are available. But then also Harris Technology are seeing some success with really pushing towards refurbished, secondhand and refurbished over new. Alex, what are your thoughts of this?
Yeah, I think there's been obviously a lot of things that have led us to this moment, but that secular refurbished tech makes so much sense. Having communities like 2 Broke Chicks where they're talking about brands like Uniqlo that do free alterations, or Nudie Jeans that have warranty for life. And that's that knowing you're going to get long-term value.
And I think the Australia Post data is kind of backing a lot of this up as well, showing that, 8 in 10 shoppers are now actively hunting for the best deals online, shrinking basket sizes, but also less frequent shopping as well. And the interesting thing about the refurbished secondhand piece as well is that we're seeing this, like we've talked about previously, in op shops, but for a lot of brands, it's a real shift in how they think rather than constantly selling new inventory. Starting to think about how do you actually start playing more in this refurbished re-commerce type market. We've talked about Black Milk, who are doing this before, Mason Sabre, who are also looking at a similar program as well, but really looking at how do you kind of look at other avenues where you can offer your customers value while still being able to earn a clip of that ticket on that sale.
Yeah, and what can you sell around that core product that's lasted for a longer time to grow basket size? What are those add-ons that enhance that value?
100%. And I think there's also, in terms of freebies as well, and looking at the offers on the 2 Broke Chicks angle, what are you offering as well besides just a discount or product? And there's a great opportunities here. And there's brands like Glow Lab, Emco, Frank Body, who are offering promotions without necessarily a discount to encourage that sale, to really drive that sale forward. So really thinking about what GWPs do you have? So that's gift with purchase, and anything else which you can offer, whether it's free warranty, free repairs, to be able to increase that perceived value of the product. Okay, our second one is Koala, which listed at the end of March. Their IPO, they launched at $3.40. It popped to $3.88 and is now trading at $3.10. Now, this is only 30 days, so it is a fairly short window. So we really need to see what happens after like 60 or 90 days. But the early signs really, for me, aren't overly encouraging. The fact that it's already a broken IPO, the fact that it's more than 10% below its listing price.
Yes. I think from what I hear, IPOing, it's always volatile, particularly like you said, like this is the first couple of weeks. We need to see how this plays out over time.
Yeah, and I think there's it used to be the dream for a lot of retailers to one day list, but really
Yeah.
I think a lot of that air has come out of that now, and people are starting to think about alternatives to some sort of liquidity event, whether it's an exit to a strategic acquirer like a Wes Farmers or something like that, or whether it's private equity, or whether it's ASX. Because ASX, there's a lot of compliance which goes into that piece. It can overtake your entire business, and then it's also so volatile with the markets as well.
Yeah, and, I just imagine slows a lot of things down internally too.
Okay, and Treasury Wine Estates have decided to restructure so that Penfolds, the flagship of the whole Treasury Wine Estates group, has now been rolled into the rest of the portfolio. So rather than having Penfolds sit out on its own, they've actually decided to merge Penfolds into everything else. And this comes off the fact that Penfolds has actually seen a 40% increase in sales over Chinese New Year in China, increases in the US, ANZ, and also the rest of Asia as well, which is fairly significant. So rather than treating it as its own P&L, they've seen value, and I guess this would make sense from rolling it into everything else to kind of potentially mask some of the declines in the rest of their business.
Yeah, I think like those numbers though, just hearing them, great news for Penfolds, obviously for Treasury Wines as well. That industry seems to having a bit of a bounce back. They obviously struggled with tariffs, and things outside of their control in that China market a few years back now. So seems like if Penfolds is going up, then hopefully the rest of the group will too.
I think it again speaks to the importance of brand and value with the fact that Penfolds is such a perceived as such a premium brand with Grange that it's their flagship. It's what they're really building the whole Treasury Wine Estate story on. As a matter of fact, you could probably argue it has been the entire TWE story. So, really thinking about that and thinking about how you segment your business. And it does recall back to Age as well, where they split the business up into four different units. It
Mm.
did diversify, it did split the focus. By actually consolidating it, you could potentially actually have more efficiency and be able to drive each market deeper rather than splitting it up into different brands and different regions.
Yeah, it's like staying focused on that North Star, but then bringing everybody up with you as well.
Yeah. Okay, we are going to get into our first deep dive in the big one here from in the ad world space is that Meta are finally tipped to overtake Google. Now, for those who don't know, because we in retail we tend to focus a lot on Meta, is that Meta are forecasted to earn $244 billion in advertising revenue in 2026 versus Google, which is forecasted to be at $239 billion. So this is the first time Google has been overtaken by Meta, and a lot of this seems to be driven by a lot of the AI which Meta have been introducing, and also with how easy they've made the platform to use as well.
Yeah, huge news. My crystal ball moment is this might be the only year that they catch up and then Google will stride far ahead again, just off the back of what's happening with Gemini and that agentic commerce piece. What are your thoughts?
Look, I think Google are definitely investing quite heavily in the AI piece, the agentic commerce piece, but also the advertising platform as well to kind of show that it has more benefits than just being like a bottom of the funnel demand
Exactly.
capture platform. Whereas Meta has always kind of had that story, and people could see that in the data. But I think in terms of some of the integrations Meta have been rolling out lately as well, you look at the basically the one click integration with Shopify, where you've got the Shopify sales channel that sets up Cappy, which increases your results by about 18% as soon as you have that set up. If you're on Shopify and Meta, you can pretty much see some pretty good results straight away. And they've been really pushing that creative narrative as well. And Google has kind of been behind on that. And I think with what they're showing with a lot of the creative piece is that you do need to do a lot of creative testing. And that's where they've been investing a lot of their time and attention, either through partnerships, but also through acquisitions as well of different AI companies to help boost people's creative output on the platform, because that's really where their platforms change. And I think they've reduced a lot of the complexity in how you can run Meta ads as well. Basically, it's just don't worry about any of the targeting, simple account structures, putting in lots of creative, testing lots of different angles and hooks, and also catalog ads, and you can get some pretty good results. Whereas Google, there's still a bit of a stigma around that. And even when speaking to a lot of founders, Google's the one which they always feel less confident about.
Yeah, it's and that's interesting flip, I think, in where Meta's gone. And to that point, business owners feel like they're getting more out of it. And that's where that trust and spend comes from.
Yeah, but I think at the end of the day, though, you still need to be looking outside of the platforms. I think if you just rely solely on in-platform metrics, you are going to get a very warped view of reality. So you always need to make sure that you have some sort of measurement set up outside of that as well to be able to actually track the proper incremental lift from your activity rather than just relying on what the platforms report, because there is a lot of duplication, particularly if you don't have CAPI set up, which does lead you to sometimes make some incorrect decisions based on incorrect data.
Yeah, absolutely.
But there was another story which came out about 24 hours ago, which was that China, the CCP, have now blocked the sale of Manus, which is a Chinese-founded AI tool, to Meta. So Meta had proposed to acquire Manus quite a while ago now, back in December 2025, for $2 billion. China have now ordered that deal should be unwound. And I think this may have further repercussions because from speaking with a lot of Meta reps over the last few months, they were really pushing everyone to be using Manus over the Claudes and Chat GPTs because of the easy integration with your ad platforms for setting up campaigns, creating ads, managing and optimizing ads. If this gets unwound, and I don't know how that's going to go, I think
Yeah.
this also kind of sets them back quite a way as well.
Yeah, it seems like they're already pretty kind of integrated and pushing Manus, so to move back on that.
Yeah, look, the teams were pretty much embedded. So I don't know how they're going to unwind this. Manus were actually operating out of the Singapore office, the Meta Singapore office, which I've been to a number of times. So you'd be curious to see whether this deal still goes through, if it does properly get blocked, how it gets unwound, and also how they separate the technologies out, because they were getting closer and closer together. Where Meta had also launched their AI business assistant as well, which was effectively there to help advertisers answer questions about their ad performance and make recommendations and changes as well.
Mm. I imagine the Meta camp's probably looking at who do they work with next or how do they build it?
Yeah, yeah. And look, it's Meta. They'll probably just buy something, right? So,
Thinking to
yeah, but I think the agentic shopping one is one which Google definitely have the lead on. In a follow-up from a story we had last week, which was talking about Nike and obviously their CEO change and some of the troubles they've faced, Lululemon have actually now appointed their new CEO, and they have come from Nike. They have appointed Heidi O'Neill, who's been at Nike for 26 years, so a proper Nike veteran, and was most recently the president of consumer product and brand. She is now the new the new Lululemon CEO, and she begins in September. So this is, I'm not sure what to make of this one. They've kind of just brought someone in who's an industry veteran, and I'm curious whether they're going to bring in fresh thinking or whether it's going to be more of the same.
Yeah, when I first saw this, I thought this is like a mouse story in heaven, right? Like Nike coming with Lulu, we probably are two most talked about brands. Um, Previously president of consumer product brand, all things that Lulu needs a little bit of help on. So hopefully it goes well. We know it's been a tough year for Lulu.
And Nike as well, and that's why bringing in someone who has been there for quite a while through some of the downturn they'd be having and the continued downturn as well, whether whether they actually have a different way of looking at things. But for me, Lulu really need to focus on the product, because their product has been commoditized essentially with a lot of other, those luxury premium activewear brands like Viore, Alo, who've been stripping away more and more of Lulu's business. What can they actually bring out to market to create that excitement again about the brand and the products which they have, rather than be seeing them as essentially substitutable?
Yeah, I think what we've spoken about a lot with Lulu is like that community and localization as well. I think like Nike Run Club's a really great example, and how can the rollout of something like that work for Lulu, as well as again product innovation. Nike obviously did Skims, very cool, really big hype as well, great for the brand overall. So is that level of collab something that we could expect for Lulu coming to?
Yeah, and what do you think about activewear in general? Do you think that the activewear market is kind of like at the peak maturity stage and it's going to start to decline? Or do you think there's any further opportunities for growth or diversification in there?
I think that's a tough one because like activewear has obviously it's for exercising, right? But it's got that comfort level off the back of COVID and it has a place in our hearts. I don't know. What do you think? What do you think the maturity levels are?
Look, I think it's definitely always going to be there. I don't feel that there's going to be a decline, but with the fragmentation which is going on in this space, it's harder and harder for brands to stand out. Particularly when you look at black leggings, which are essentially a commodity now. Black leggings are black leggings are black leggings, and so it's really about the brand. So how do you create a brand which can stand stand out in this space. And Lulu have been making moves. Obviously, they did the NFL collaboration early this year. They still partner with a lot of top tier athletes, but they're operating with budgets significantly smaller than Nike, who are continue to partner and still, despite their struggles, are far and away the biggest sportswear retailer in the world still.
And have that wholesale network, which Lulu don't. Correct me if I'm wrong.
I'm pretty sure they don't. I don't recall. I think I've never seen Lulu anywhere else except for a Lulu
Neither.
store.
No, neither. Which is part of their bit, but Nike's also got a lot of channels through wholesale.
Yeah, and I think you kind of see a similar story here as well with some of the activewear brands in Australia, such as PE Nation, Stax, who have also kind of been going through a fairly rocky times as well. Lately, obviously, Lorna Jane have made some moves and are starting to re-emerge, but it is a bit of a challenging time when you're in the activewear space. Honestly, I actually feel that the opportunity is in those niche players to kind of carve out more market share from the bigger guys who are more mass market now. That's where I see the opportunity is. So for Nike, so for Lulu, I just feel like because they don't really own a space where Nike owns that whole performance, top tier superstar athlete space, Lulu's not there and they're kind of in this weird spot now.
Yeah. Well, one to watch. We'll
Yeah.
see.
Well, probably won't see much till after September, which is also an interesting time, appointing a new CEO right before peak. All right, and our last story for today is Edible Blooms are going to be consolidating. It looks like they have now acquired 3 additional hamper brands. So dessert boxes, gift baskets, and hampers.com.au. Well done to Kelly and the team there. And they're now going to be offering a marketplace for gift boxes and hampers. So with 700 plus products, same day delivery nationally, and a category which Shopify is projecting to be growing 43% year on year. It's pretty significant, and this is a big move by Kelly and the team.
It is. It's a big project. Like Adelaide brands, we're all really excited for them, right? Really, really great to see that growth. And to run a marketplace in that space of gifting, I think it's an exciting kind of piece of the business.
Yeah, and this one just completely makes sense to me when I saw this news, because they're all aligned businesses. They're 3 other brands which really just fit into that one category. So it's just that horizontal acquisition and expansion of a fairly large category, which is continuing to grow. Yeah, and this is starting to attract private equity as well, and other investors. That seems to be the word on the street from a few weeks back. So I think it's really exciting for them to be able to consolidate around this, share those efficiencies across different back ends. And it is a big contrast to some of those other consolidation players we've happened previously, where you've got a bunch of brands who don't really fit each other being consolidated under the one banner, and them struggling to work it out. And you compare this with Michael Hill, where Michael Hill have now cut their portfolio from 5 brands to 2 brands. So they've dropped 10-7, Watches Galore, Medley, and only keeping Michael Hill and Bevel's, where you've got, again, similar story, but in reverse, in that they've kind of put 5 different categories together, which are kind of all in that same jewelry, luxury accessory type space, but don't really make a whole lot of sense to be selling underneath the single shop front. Whereas Edible Blooms, it just makes sense. Yep, I'm super excited as well. Look, and it just, like I said, I just can't just stop saying it. It just makes sense in terms of like the overlap, the fulfillment, the processes, everything just makes sense in this one. So again, well done, Kelly. I will be sure to buy you a drink, or maybe you can buy us a drink. We're at Retail Fest next week. Okay, that is all we have time for, because we have to get ready for Retail Fest. We've got a busy last week before we head over there. Alex, I'm super keen to be catching up with you in person, even though we live, only a stone's throw from each other. We never see each other in person, as well as the rest of the retail industry as well. All right, is it going to be shorts weather? I think it might be. So we'll I need to check the forecast. Yeah, I'll check it out, and I'll make sure I pack the Japanese, the new Japanese sneakers as well when I go. All right, that's all we have time for. In the meantime, keep innovating, keep growing, and keep selling, and we'll see you live from the Gold Coast next week.